On to the bull versus bear segment, and in today's session we get you the bull versus bear argument by Puneet on Anupam Rasayan. Puneet.
We'll try getting persistent. We'll try getting a persistent view first. Definitely a stock, in news flow because of a negative news flow that's come in today. One of its key clients, United Health, which is one of its top clients in the healthcare space, is now being probed for Medicare fraud. Now, that is definitely one of the key negatives because in this particular year, for Persistent, healthcare was going to be one of the key growth verticals. It's roughly the third highest in terms of revenue for the company, so definitely a negative news flow there. We put the bull case as the recent news flow on quarterly earnings. It's well known, very strong earnings, very strong deal wins as well. But this will be something to watch out for going forward. We had a note today from Dolat Capital. They are anticipating, let's look at the second bull and bear case, the 60% of Persistent's FY25 incremental revenue will be impacted because of this, and that came specifically from this one client, which is United Health. So that was a major portion for the company in terms of healthcare incremental growth revenue, that is compared to FY24, and hence going into next year that might be impacted. We've also seen the other verticals like BFSI is expected to continue the growth in FY26 at a time where we've seen within the developed markets we are only seeing BFSI as a criteria being spending essentially on IT. That could be one of the key wins for the company, but definitely this is a negative news flow. Finally, let's look at the near-term growth that largely will now be skewed towards the non-health only and could put a little bit more pressure for those clients to for Persistent to outperform at least on those clients. That will be the third bear case that we're putting. Company targeting $2 billion in terms of revenue by FY27. They are currently at 1.4. So anticipating strong growth over the next 2 years. And finally, in terms of valuation, and that's at 41 times price to earnings for FY27, one of the most expensive stocks, or actually it is the most expensive stock in the IT pack, and that is largely because of the company's growth seen over the last 4 to 5 years. That could be under pressure going forward from the newer verticals like healthcare. They have mentioned, or as I mentioned, the last 5 years have been incremental in terms of growth post-COVID. But now with this news flow, stock could be under pressure going forward as well. And the company, we will be awaiting some more details on this. But as of now, stock down in trade today because of one of its key clients facing probe in the US.
So just Puneet, thanks for that. And the number is, it's one of the top 5 customers. And the top 10 customers' contribution for Persistent is about 40%. So now you can kind of do the math that this could be about 8-9% of revenues, or maybe 12% of revenues as well, or thereabouts. And I mean, the number is not quite known because none of the IT companies give that name and the customer-wise breakup. But no surprise that Persistent Systems down about 1.47%. Dharmesh, at 41 times FY27 with a top client coming under pressure, does it call for caution? It does, right?
Yeah, definitely, yes. See, the one good thing about Persistent System, it was quite persistent with its growth trajectory in last 2-3 years, and it was consistent with all the numbers and the margins itself. This quarter earnings was also quite robust and quite good, with commentary being quite positive. But one has to look into the details of this entire probe, and definitely it's a cautionary stand. And these things are taken very seriously in the Western world, and definitely there would be some damage, and it's a reputational risk as well. I don't know how much it will come to the softwares which Persistent System has implemented there. That accountability has to be seen. But as of now, it's an avoid. Let's be on a cautious side. And people who have been invested into this company, I'm pretty sure they would be making good money because the stock price in that way is quite resilient. So would recommend them to book money and be out of it.